And I will try to make it in a three form. In the first part, I'll just give a story. And the second part, I'll give some theoretical and descriptive explanation of it, overall like description of it. And then finally, we'll give the application of this model or of this concept in different models. And we'll wrap up with saying some implementation and recommendations and some final remarks. Actually, if we look at the story of this concept that we call rotating savings and credit association is what not as it is before. It started in 2000 BC among Chinese community. They started coming together to buy something and with a group of people saving, as we know, I'm like a portion of amount, and each month or each week or each 15 days, they'll have a lottery to get someone and get the product, and it continues until the last person receives. So then it evolved, and we got first documentation and as a document in 13th century in Japan. And that system, the same system was written as cow. The name was mentioned in cow. And there were 6 steps in that time. It was recorded the first time. Then in 1775, Ketley Building Society also come up with some macro concept, not the whole macro, but they started making it more household appliances or household assets acquisition. Later, 1831, it came with Oxford Provident Building Association with the same concept, with some extension. Later, 1962, the first time it entered as a term, rotating savings association, in academia, like the published as a publication. The 1990s, though 1952, there is a information about epic ready in Turkey, but later it didn't get that attention. But later 1990s, it came as a cooperation system, and later and until 2000 to present, it changed its total dimensions to come from micro to macro, from self-fund acquisition to real property acquisition, on housing and automobile in Turkey. And the term was it is called as saving-based finance. This is the brief story of this one, how it evolved. And if we divide this one into phases, it is 5 phases. Number 1, before emergence of banking system that we already mentioned here. Number 2, from the emergence of banking system to Second World War. And number 3, we have from Second World War to 70s, 70s to 90s, and finally 90s to present. These are the breakdown that was done by, we did a research, and we separated that the phases. Now, the cow that we said, it was 6 steps. I'm not gonna giving only these things that people come with a contract, meeting together. And let me give you a more clear idea. In Turkey, it is called as a sanduk or altıngun. Everyone knows about it. And they come and they have an agreement, they pay certain amount, and of course, following certain rules. And it is, with the drawing, it was rotating until the end. And the member has received fund, and the person who received the fund, they have no right for the next lottery. And they always used to meet on 2 or 3 in a year. Mostly it was closed, like disbanded, but if they want to continue, they continue later. Now, there are many definitions of it, and let me totally summarize it. Give me one, the last one I will give you, done by Dinch, that SBF or ROSCA refers to the process of collection of people pledging to give a specific sum of money, which is to be used to meet the funding needs of each participant based on mutual trust, collaboration, cooperation among participants. The differences between the definition of the conventional with the later is the is emphasizing on the collaboration and cooperation. That was in definition-wise, the differences. Otherwise, all are same with different wordings. Now, we did a research extensively about the names, because the Rotating Savings and Credit Association is an academic name. Academically, we know it. But it has total 105 names across the globe. The colored one that you are saying all has a different name. For example, the whole, if we call about the Asia, Africa, this part, the South and West, they used to call it Isusu or Susu. But in North Africa, they call it Jamia or Gambia, they call it. In Turkey, they call it, as I said, Altıngunu. In North America, and they call it cooperative. And South America, they call it partner, or also Susu. In China, they call it Hui. And also in South Asia, they call it on committee. So there are many names. I'm not gonna go details. So the discussion, this discussion that the paper I'm presenting is mostly on the investigate the inclusion of ROSCA in the Islamic financial ecosystem, how it has entered Islamic economic system, on what basis. And this has to consider the social aspect of the model. There are many dimensions of the model, which I will show you later, because we did a systematic literature review, and we found many outcomes, many findings, and we specifically choose the social aspect of it, which is missing in current system. And through Islamic social financing mechanism, which we call it, we have waqf. It is famous in Turkey, awqaf, and we have zakat, sadaqah, and also qard hasana. Qard hasana it is about the interest-free loan. So now, if we look at the savings has many points. Savings finance. It has cooperation, collaboration. The cooperation because of the drawing system it has, because it comes. They make a drawing there, lottery there, to select the individuals who will receive the fund. It has also collaboration, because people are coming to collaborate, to save, to be a creditor to others without receiving anything. In fundamental structure, but of course there are other structures as well, where interest-based system is also there. But in Islamic finance, we are taking only the interest-free one. And the reason it is theoretically it entered in the Islamic finance, economic and financial ecosystem, is because of the two concepts. One is infaq, which is called spending, and another is ta'awun. Ta'awun means mutuality. So the solidarity concept is there. So the other reason of Islamic, this ROSCA or savings-based finance is called in Islamic finance is three. There are many other aspects of the research on it, but the reason it is considered by this study in Islamic economics and finance is no interest involved there, no zero-sum game. Because here I may get it later, but I will get it. So there is no zero-sum game involved. And the other principle is that everything is permissible unless it is proven to be impermissible. So in that sense, the ROSCA and the current practice in Turkey is not proven as unpermissible, not non-permissible, so it is permissible. And finally, some people claim that ROSCA or SBF is cooperative. Yeah, it is. It has elements of cooperative. But the two things that differentiate SBF from cooperative, SBF has a regularity, which is in regular basis savings. Another one is a rotation, which was different from cooperatives. It also differs from the takaful, which is called Islamic insurance, because Islamic insurance or takaful had the same approach, similar kind of structure. But the idea of takaful is totally risk-oriented, risk alleviation. But SBF is the acquisition of durable assets. So now let's come to the theory. We have, I'll just skip it to finish it within a few minutes. Theoretically, we can make it in different theories, but I mentioned only social capital theory, behavioral theory, and agency theory because of its nature, the ROSCA nature. And interestingly, the ROSCA was never been under law. I mean, it was always in informal savings. It was always, but therein some changes happened in South Africa, which is Stockville. They make it law. And amazingly and importantly, Turkey also made a law because of its high demand in 2001. The main, before this law, after 2016, there is almost a mushrooming started there in that company, in that landscape. Around 40 companies were there. So after the law, it became 6 companies. The main idea was the company is required to have minimum of 100 million, actually, which somehow encourage or make other companies to go liquidation or merge with other companies. And financing also, they prohibited refinancing it from other causes, except acquisition of house or automobile. Also, they have a reserve fund. They must have reserve fund. And then importantly is that it must be an interest-free principle, based on interest-free principle. So these are the common rules. There are many other rules which can be found in online. So these are the 6 companies that are, we see that Eminevim, Fozolevim, Birevim, Atilimevim, Image, and Sinpash. They are coming with a different model. There are model engineering there, but the base model is the ROSCA. So it is from 1991 until 2020. And now what we did when we are going through this model, we found that this is the whole concept. So we did a systematic review. In a systematic review analysis, we did a prism analysis. We found thousands of articles, and we then screen them and make it then after screening, then eligibility check. We finally included 114 papers in our analysis. And we use this, we developed this equation to make it more general for anyone who wants to do a systematic literature review. For any concept, they can use this one. And we found some amazing things, is that most of the articles are Africa-centric, not others. And the paper was mostly focused in, after COVID-19, it get hiked. It got a tremendous pace in that. The reason is behind it. If we look at the 2008 crisis, after 2008 crisis, of course, the whole population, they tried to have an alternatives. So when they try to have alternatives, they try to see what is existed in current market. So in that sense, also after 2019, 20, the attention of this concept in academia got paced or got higher. And then we did also citation basis, the same thing, and we found that interest-based is more prominent than interest-free, which is only handful paper was found which are discussing about interest-free ROSCA, not interest-based ROSCA. And we did also methodology part. We found that mostly there are many methods of ROSCA, but they are mostly inclined with 3. Number 1, binding ROSCA, random ROSCA, and fixed ROSCA. And we did a biometric analysis to find the keywords, and we found that association was the most prominent word that was used throughout the whole years. So these are the major key takeaways that we found. Academia, like if we look at that, after analyzing all this, we found that academia's attention related to ROSCA started by focusing on characteristics, operations, economics, institution, and members. And these 5 characteristics is noticed throughout the years until 2021, Even 2022, there's a new papers is coming. There are papers also, they're focusing on all this. But in 2000, it was starting in that basis, 5 criteria, then shifted to law, source of fund, and history. Then social benefits and contribution. And finally, it entered into the risk approach, behavioral approach, and digital approach, those things. And according to findings, a state conversation boundary has been formed, demonstrate the progression of ROSCA notion throughout the years. It has shifted from causal to official, casual to official, small scale, or we call micro to macro, personal to organizational, and societal to economic. And finally, it was from informal cash accumulation for self, then real property acquisition. These are the whole takeaways that we found. Now, based on this whole concept, this is the ROSCA, this is how it works. We come with the social approach. So, and we developed 3 models based on that. The first model, we call it SBF-centric national level solution. This solution can be also can go for poverty alleviation, for national emergency situation. Also, it can go for entrepreneurial development. For example, we did a research on it in a country of Bangladesh. We found that there are almost 3.5% of Zakat proceed is there. Percent of GDP is there. So that amount is a promising amount for that country. So what if we try to get the amount and apply this model? This model has 4 layers actually. The first layer, we have this one, the layer of all union base, then we have Thana base, district base, then division or state base. So the idea is the money, it comes, it will be saved from the union to Thana. Then it will be distributed. It's like a jet propulsion, like back and forth, from micro to macro, from macro to micro. It goes, the collection happens through micro to macro, but the distribution happens to macro to micro. For example, the 40% of the collected amount for example, there is a $1 billion of amount for Zakat. So 60% will go as a normal cause of Zakat, people who are supposed to get the Zakat, but 40% will be followed or will be processed based on these 4 stages. First, 15% go, then 10%, 5%, 5%. In this way, we'll try to cover the entire country to solve some issues that are that needs a national approach, not an individual approach. And second model that we discussed was kind of empowerment model. The empowerment model we tried to do at Muslim women, financial empowerment of Muslim women through Mahr, the dowry that we concept has. The reason we found this one important, the Mahr, is that if you look at the other religious spectrum, when there is a marriage occurred, the ceremony, the dowry concept, dowry goes from man, woman to man. But only in Islam, the Mahr goes from man to woman. So it is an opposite approach. So we try to take that indicator, that Mahr, and how, because most of the cases, this Mahr was either forgiven or delayed, or it was even just out of, it's a promise, but never fulfilled in some cases. So what if we can monetize or make it, or engineer that Mahr concept and use it for the benefits of that woman? So in that sense, we did where this institute can be and this is the empowerment fund, and there is a final beneficiary. The beauty of this model, it doesn't work only to financially empower Muslim women. It also facilitates the man who has the problem of accumulating the fund. So in this process, we facilitate the whole agents, the entire agents, especially both men and women, to empower empower women here. So it comes here, for example, there are 10 people, they want to just go for this one, they have certain amount of money they need for Mahr. There's a whole process they discussed, but I'm just going to give a overview. And they apply to the institute. Institute go for crowdfunding for savings from investors. It is open to contribute based on the mechanism. Each one will get one beneficiary, and it will be, the money will be divided based on the lottery. The first person will get the first, then second, and later this process can be as a gift process or can be as a interest-free loan, we call Qard Hasana. It can be also as a partnership, like profit from that. And this can also happen for basis of kind of intervene here to make it more smooth the process. So why it was required, we asked the simple question of women in different countries, that do you think the financial contribution of a woman exalt her decision-making power and strengthen her financial position in the family? And fully agree 45%, and 40% are partially agree, because they said that it's not only about financial development or freedom, is all about also support from the family and husband. And 15 totally unagree. They do not agree. They said no, financial contribution doesn't empower a woman. So the last one is that the empowerment model that is specifically for entrepreneurship. Let me tell you one thing, that there are many models for entrepreneurs, and we started calling it SMEs, then MSMEs. But we figured out one thing in after COVID-19. After COVID-19, when there is a stimulus package from the government, we found that many small and solely, the vendors, for example, they were not under that package because they don't have any registered, their company or their activities are not registered. So we call them, in academia, they call them nano-entrepreneurs. And that nano-entrepreneurs were not focused were not under that stimulus package, which was, it means that they were always separated from the whole system. So when we come up with the idea that why not just use the same model to work for the nano-entrepreneurship, to make them, to stabilize them in the crisis moment or normal moment. Use this process. We have some selection criteria. We did, because we cannot take everyone. So we did a screening method and to get who will be eligible to get the fund from the system. And to the people who can, the entity or agents who can be the source of fund, it can be individual, it can be local NGOs, it can be also Islamic social financial organization. And finally, it can also be an international actor. So they can be part and parcel of this model. In this model, as simple as it is, if there is, for example, 10 nano-entrepreneurs, that they apply for the process, and the company or the intermediary will go, SBF platform will go for funding. The fund will come through that fund, to that institution and be delivered to them. The difference is that once it is delivered, it can be delivered in 3 ways: either gift, again, the Hasana, or partnership. When it is in partnership, the money is received through in that process. They receive the fund, the nano-entrepreneurs. Then they need to also, when they're in break-even, they need to also save 10% of the fund in that to make it sustainable. And also after the break-even or the contract with the fund provider, there will be a reverse SBF model, where the nano-entrepreneur will become a founder, a contributor, and the contributor who are in the first phase will become a receiver. So in that sense, we can also empower those nano-entrepreneurs. And this process will take place based on the whole concept that I explained. Because of the time limitation, I cannot go in details, which needs actually details. Each model take one session, because there are many other aspects also need to discuss. But to make it simplify it is all about to empower that the group of people who are somehow the backbone of an economy. And application of studies, because this is the compilation of new studies. So the whole studies advocates the emergence of concept as a new branch and rejuvenate the cooperation, collaboration, and solidarity dimension in Islamic financial ecosystem. The national level Zakat model that we see the first model, it facilitates an equitable distribution of wealth among individuals, aiming to uplift financially vulnerable people, elevating poverty, providing funds for emergency situations that I told you. For example, earthquake in Turkey happened. That model can be applied for that one as well in national level, and improving socio-economic conditions. The second one, the model empowers the extended women through, it empowers women through their own exclusive financial rights, and also the facility men to provide that fund and increase that, ultimately enhance the family bond. And finally, the empowerment model is entrepreneurship model, enables nano-entrepreneurs to own assets and thereby increase the likelihood of having a private ownership and savings landscape, ensure sustainable financing, and uplift their social status. So based on this one, we try to give some recommendations. So I'm not going to give each one only I'll give only, discuss only policy recommendation. We separated, we did some general recommendation. We need a conceptual development of this one since it is new in Turkey, or also because Turkey has this concept is macro level, so it needs some academic attention along with institutional attention. We need infrastructure development, sectoral development, we need awareness, we need sustainability, risk management mechanism, we need more, and we need also the cooperation, integration with fintech landscape. Now, the main policy is that the policy is necessary now in Turkish background is that the profit sharing status should be clear. In the current system, it is not clear. So how much, if it is not clear, there will be an issue from Sharia and Islamic spectrum, financial spectrum. Second one is provide diversification. The current system allows only three, like house, automobile, and working space. But it needs to go beyond, for example, social aspect as well. Then savings deposit insurance fund, which is common for conventional bank and participation bank, that can also be incorporated in the system. And contract limitation clause. Now, if anyone wants to enter in the contract now in Turkey to buy a house or car, $1 million is enough, 1 million Turkish lira, but because of the hike of inflation, it should be 5 to 10 million. The third one is, the last one is the equitable forward contract. It is very difficult to fight with the inflation. There are many ways to do that, but ultimately all the economy is fighting with that one. So there is one approach can be equitable forward contract. The SBF company should have their own subsidiary, the company who will deliver instead of a third party. They'll have own deliveries, own sister companies who will deliver. And in that case, a group of people who will come to buy that things will have a forward contract for them. So in that, we may have some leverage with inflation. This is the final. The last one is, the question is why it is necessary. Why we are just looking for this one. We have many alternatives. The reason is not about many alternatives. The idea is whether it is necessary or not. So we look at that financial crisis. We see that when there's a crisis, there are many alternatives pops up to the economic system to just fulfill the gap that was prepared done by the existing financial system. So I'll just give one analogy, is that one day I was in traffic. I saw there's a bus. I was in public bus, and I saw there's a traffic, the signal is there. But even though there's a signal, the bicycle and motorcycle, they're bypassing them, other buses and trucks and cars, and heading to the light. The analogy is that if the light is our target of a country, and buses are the main conventional system, and bicycle and motorcycle are the alternative approaches. So it seems that even if there is a traffic light, because of the approach, they may bypass to all these obstacles and heading to the target. So these are just the reason it is important, and also important to improve the existing, because the people's life, it depends. It is not absolute. Time and space, it differs. Today, the financial institution or financial system we have, it is based on the time and space. Tomorrow, the time and space is different. So if we allow them to allow the inclusion and access, then of course we'll have a better option for entire country or human being. Finally, this is the inclusion of ROSCA in Islamic finance is because it happens through the societal aspect of it, and it is necessary to do that because there are already interest-based system we have, and since Islamic finance is a collaboration cooperation approach, it holds this approach, and ROSCA or SBF can strengthen its goal, its process, and the final words is that since we are social, and socialization is an integral part of our life, and cooperation and collaboration is a part of that system as well. And savings and economics is a very important factor for economic growth. If we look at the if we look at the ROSCA or SBF, it has three, including. So this system should therefore receive a close attention from authorities and academia to assist in improving a country's social integration and economic condition. Thank you. I tried to summarize everything within 30 minutes. If there is anything that I can share with you, need any questions, of course, I'll try to answer within the scope, inshallah. Thank you very much.
Rashid, thank you very much. I mean, it was a very nice presentation. As I see, I mean, in the past, in the traditional societies, we have that instrument.
Yes,
small-based, community-based,
yes, yes.
Informally based on trust, tradition, whatever you call it. But now we are in a new stage, supported and more formal, and it's been also now regulated to some extent. And I see it is in its infancy stage. It's gonna grow up over time, hopefully, and with the help of or contribution of fintech, maybe we will have a new environment totally from what we have now. So thank you very much. I mean, it was a very nice presentation. I mean, when I listened to you, I was surprised how we came this far from Altın Günü to ROSCA.
From micro concept to macro concept.
Very. I mean, within a very short period of time, what we see is a tremendous achievement development. I mean, it's remarkable. Thank you again. For this nice presentation.
Thank you for allowing me to this wonderful platform. I'm glad and delighted and honored. Thank you very much, Prof.
It's our pleasure. Thank you.
Okay. Assalamu
alaikum.
Should I leave?
Yeah, I don't know. Maybe do we have any questions?